Good evening, good afternoon, good morning, whichever part of the world you are in. Assalamu alaikum, namaste, sat sri akal, and let's move on. Um, Today is the Monday, 27th February 2023. We are diving into the global market review, which we did about 10 days back, and proceeding from there to see what all happened in the world and what the global equity markets are telling us as of now. Just a quick mention that we also do other market reviews on the forex markets, the bullion markets, the energy, agri, industrial commodities. Also focused on market reviews on the US, India, and the Gulf markets. If you are interested in any sort of collaboration or would like to give some feedback or participate in some of our upcoming courses for serious investors only, then you have our contact information on the screen. Please do get in touch and we'll be happy to get back. Great. So with that, let's look at what the charts are telling us about the state of the world and what's been going on. What you see on the screen, just in case you are new, don't feel too overwhelmed. These are just 3 charts, or actually 1 chart in different time frames. So what you see here on your screen right now is a daily chart of the S&P 500 index, along with some very traditional old-timer indicators, the RSI and the MACD, in candlestick format with some long-term moving averages, and this is in the daily format, in the daily time frame. On the bottom left, you see the same chart, but in a weekly format, and on the top left, you see the same chart, same symbol in a monthly format. So this then gives us perspectives across all major time frames, especially the longer term positional type, multi-day, multi-year time frames, and then helps us to get a better perspective and understanding of where the markets are and have been. All right. So when we did the previous market review, the S&P was about at this level, and clearly after that it has corrected a bit and is now toying around with its long-term moving averages and sitting on the 100, 50, and the 200-day exponential moving averages, which are those red, green, and blue lines. You also have the 20-day exponential moving average in the yellow line there. As you can see, the S&P has basically been range bound for more than about a year now, not really doing anything substantial. Has broken out of a downtrend line which started in January 2022, as we mentioned in the last week, and has now formed higher tops and potentially maybe forming a higher bottom. So as of Friday close, last Friday close, we formed a small hammer type candle around the trend line, uptrend line. It'll be interesting to see whether this can hold and the market can reverse from here, or are we looking at lower levels and maybe 3,900, 3,850 levels on the S&P 500 index. Nothing in terms of any particular global event that I can think of that would be a trigger as of now. The world has basically completed 2 months of 2023, and we are just trundling along. So nothing of any major significance on the S&P 500 charts. Looks like we are in a potential uptrend, and it'll be interesting to see if this channel holds and the market can go back up. So for positional or longer term traders, this could be a good entry point on the US markets with a pretty small stop loss to look back and to enter long and look at 4,000, 4,200 levels, maybe in about a month or two, quite possible, right? The interest rate cycle is not yet topped, as we know. So there is that overhang. but there is more and more talk that it could taper off in the coming few weeks. All right. Moving on to the tech heavy NASDAQ, as we mentioned, has not performed as well as the broader S&P 500 market. And if you just do a very quick review, you can see clear higher tops, higher bottoms, and a channel on the S&P 500, while the NASDAQ definitely does not have such a strong chart pattern. However, it has also broken out of its approximately 1 year downtrend line, and there is scope for it to move up and form its first higher bottom perhaps at this point, right? So we'll just have to wait and watch to see if that happens. All right. Looking at the, all right, we had the Russell 2000. I'm not sure where that disappeared, but we had put this last time to also signify how the broad market in the US, beyond the S&P 500, beyond the Nasdaq, has actually performed way better than the main indices and even the tech heavy stocks. So the industrials, the logistics, the real estate, and all those things which are of the broader economy have definitely done, entertainment have done much better overall than the main board stocks. And this is clearly borne out by how the Russell 2000 has behaved. And if it can break out, that's that important 2030 level, 2030 level, then we're probably looking at the US markets definitely going higher. And that's quite a possibility as we speak right now. As a matter of fact, compared to all the three indices that we discussed so far, the Russell 2000 is actually better placed from a moving average perspective than many of the others. It's above significant moving averages, while the others like the S&P 500 is not so well placed, right? So it'll be interesting to see what happens. And as I've been saying, even in the previous webinar, I think the broad market in the US is definitely a place to look at, and will do way better than the main indices there. All right. If you're interested in, a deeper dive and a more informed, insightful view, then you should look out for our US focused market review, where we will look at in many of the sectoral indices and definitely individual stock setups, which are very promising on the US markets, right? So that's on a separate webinar. In case you would like to receive information about that, do ping us, and we'd be happy to let you know. As you already know, this is how you contact us. Great. Okay. So broad market US definitely doing better than the very, very broad market, doing better than the main market. Last time we had said that Europe has done way better than the US markets even, and this is continues to be borne out 2 weeks almost after our last review, that you're looking at the DAX right now, that's the German main index, and now looking at the CAC 40. Both of them have not corrected as much as the US markets have done, right? So definitely outperformance in Europe continues. And most interestingly, if you look at the CAC, the French index, what is very interesting and quite fascinating, I would even say, as far as the French index is concerned, is the fact that coming to the monthly charts, the French index topped out in 2000 at these levels, did not come there till February 2022, which is like 22 years later, literally, while most of most of the European markets were quite big laggards. And now we are having, remember this is the monthly chart, you're looking at the French index having corrected from its life highs, come back to a very good support October 22, which is all the way back from, you could say, 2006, and then now on a rise again. And even the indicators, RSI and MACD on the French index are very favorably placed to suggest a further move up that can't be ruled out. Putting a very long term almost 1.5 decade trend line here. Uh, of course, not very useful from a trading or wealth creation, from a trader's perspective. But if and when there is some sort of a recession that is being spoken about in 2023, in case for some, I don't know what reason, the markets do come back to touch this, about 12, 13-year trend line, that would be an excellent time for entry in case you missed any opportunity so far. So this would be a fascinating thing to look at. However, I don't expect that the French market, to fall to these levels I don't see anything happening unless there's some sudden event that we can't predict, of course. Uh, and this tweezer stop, which is there in the French market, once it's taken out, very likely that the French stocks are likely to rally much, much higher. So this could be the year for European stocks. Just looking at the DAX, to see how that is performing. The DAX definitely did way better, and as you can see, rallied beyond its 2000 peak in 2013. It was at 8,000, went all the way to 16,000. So that's an excellent move. And this uptrend seems to be very much intact, one could say, and headed even higher. The multi-decade sort of trend line is very, very much intact. Excellent bottoms on that to be watched out for. Um, Not very close, not as close to the life high as the French indexes, but nevertheless a strong performer, and definitely, like I already said, doing way better than the American side of the market. So if you are looking as a strategic investor, then one would have actually gotten into the European market about 3 to 6 months perhaps. But even now, I think the European stocks and European market is where the action is likely to be for the coming few weeks and months. All right. Looking at the FTSE, somehow we have very limited data on the FTSE. This is definitely not the life high of the FTSE, but that's also doing well, quite surprisingly doing well, in the sense that there is the well-known fact now that the British economy is the worst performing in the G7, just saved itself by literally hair's breadth from from technical recession. But yes, and now there's this talk about the Northern Ireland Protocol being negotiated, and something really could come out of that. If that is, that would be a big feather in the cap for Rishi Sunak, the Prime Minister of UK, and could resolve quite a bit of issues of trade between Europe and UK. And if that does settle down, then definitely good for British business, and we could see a leg up on the British markets there. Um, Definitely underperformers in terms of the rest of Europe, but maybe they are in a catch-up phase, and we could expect much better moves on the British side. Again, sitting at support levels, and a good time to enter with a pretty narrow stop loss, right? But watch out for the Northern Ireland Protocol news. In case anything comes out, then that would be something to jump into or jump out of, right? Okay. Next is the Nikkei from Japan, as we already mentioned, really not doing well, or well, not doing anything actually, for almost a year and a half, just going sideways, 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 nothing to really speak of. In a very long-term perspective, there's a weekly chart right now, right? if we put up the monthly chart, if you look at it even from a monthly perspective, one could perhaps say there's a sort of very extended in terms of time flag that is happening in the uh, Nikkei, and whether this will break out or break down, we'll have to see. Like most likely flags do break out, and if that happens, then is the life high on the Nikkei on the cards is something to think about. New uh, governor for the Bank of Japan who's been appointed, long tenured academic, and there's a lot of talk about whether he will change the multi-decade monetary policy of Japan and see if something can be done to stimulate real growth. There was news a few weeks, 2 weeks back about how Honda and Suzuki made the highest pay wage rises for their employees in many, many decades. But that is a reflection of the pressures of inflation that not only Japan, but the whole of the world is facing, right? So that's on the Nikkei. It'll be interesting to see what this flag does. Good to track these levels, and the levels, I mean, the channel is here, right? Say between 25,800 and 28,000, and do swing trading between these channels till such time that it effectively breaks out. So this is effectively a 2-year plus channel that's going on, more likely to break out than break down by the looks of it, and generally by what TA does, right? Or rather, what flags do. Next, coming to China. China, as we know, has been mentioning this over and over again, is now opening up very, very aggressively. COVID is officially dead for all practical purposes. So don't be surprised if there is some, further news mentioned last week that with this Chinese index, the Shanghai Composite, right, having rallied quite a bit, and this uh, mm, 7, 8 year flag going on. It's just a matter of time where this is going to, break out or break down. You can see lots of volumes that are happening here, and it'll be interesting to see what happens next. Still in that sideways zone, there is always this talk about China, US conflict that's going on. Who knows? Probably a lot of grandstanding with the US elections in 2024, plus things to uh, domestic political pressures in China. But all said and done, looking like the Chinese economy, or the Chinese stock market rather, and there is a lot of talk about how China is perhaps shifting its economic focus from export-oriented GDP growth to domestic growth. So very much related to what happens in China is, of course, what happens in Hong Kong. So moving on to the Hong Kong index, uh, and looking at it again in the multi-time frame setup that we have, been a correction. There was, remember, a huge move in the index in the last many months, which was of the extent of 52% from the lows to the highs. As I mentioned, this was like the official end of the clampdowns in Hong Kong, and the grand sort of very aggressive reopening of the Hong Kong economy, with a lot of measures taken to basically discard all um, you know obstacles, including the COVID thing, and the stock market boomed. Now, of course, there is this, after this 50% move in an index or a major index. Imagine that we've now seen a correction of decent proportions, I would say. And I think for those who are looking at Hong Kong, definitely one of my top markets to look at as of now for the next many months investing. Both China and Hong Kong, plus Europe would be, I think, the top ones to be looking at in terms of the major global markets, right? So this is what Hong Kong is doing, has corrected quite meaningfully from 22,700 to 20,000 levels, right? Almost a 10-12% correction. Not yet over, probably may settle down. Let's see if we can find some really good supports for the Hong Kong index. Anything on the near term is probably, well, not very far at all, right? So we're looking at 19,474. We are at 19,943. So about 400-500 points down on the Hang Seng index is where some support is very, very likely. And if that holds, then that could definitely be a place for entering the Hong Kong markets. And finally, coming to India, Nifty, like I've said, India markets have been the underperformer globally this year, and that underperformance continues. Looking at it just from the daily charts, quite maybe a little bit messy with all those lines that you're seeing, but from a high of about 18,900, we have now corrected. So this is where we were around the last IMR when we did it, right? And that correction, as expected, has continued. Taken support today at the budget lows area, but intraday there was a breakdown. Now, whether this will hold or not will be very interesting to see. There is this short-term support is on an intraday basis has been broken, but not on a end of day basis. So if I just make that line chart, the blue line, you can actually see that what we have is lower tops and lower bottoms that are continuing. Let me reset this line, right? And we definitely have lower tops, lower bottoms that are forming. So in a, one would say, very, very, very clear, confirmed downtrend. And this downtrend, there we go, right? So based on just channel studies, we might look at 17,250 or even lower or 17,200 in the week ahead or two. And then maybe we will look at a bounce. But again, we are very close to that level. And today we did retrace from that level. So it is quite possible that we may even turn around from here. It'll basically depend on maybe the mood of the global market. Really nothing to talk about. Like I said, the US markets, uh, oh, there we go again, at also support levels. And if they do take support and they turn out, now notice the very clear difference. You're looking at an uptrend channel here, right? You're looking at an uptrend channel here in the US markets and many of the other global markets, but we are looking at a very clear downtrend channel in the Indian markets, right? So it'll be interesting to see if the Indian markets can actually turn around from here. And if they do, well, is the correction over, at least for the short term, or do we see further lows? What is also interesting, of course, this was all the budget time. This volumes, the massive volumes that you're seeing here, reverted to normal volume. So really can't read much in terms of, whether this is a high volume, low volume selling. I wouldn't really compare it with these volumes, but just making a mention of it just in case somebody thinks that there is low volume selling. It's really normal volumes on an average that are going on in the market. At the very least, one could definitely say that there's no high volume selling as of now, right? So possibly short-term bottom is in place, and it'll be interesting to see what the market can do tomorrow. So that's it on the global market review. Very quick. We will add a few more indices in the subsequent webinars, add some European indices, oh no, sorry, some Gulf indices and some other interesting indices to show how, global markets interact with each other, and also demonstrate how global investors can, if by keeping a global perspective, can shift their investments from one place to the other to take these strategic changes that happen. So with that, we come to the end of the session. Thank you very much for your patronage, and definitely looking forward to your inputs and feedback. Thank you and have a great week.